The world is crashing into recession and there's no escape. So the IMF has come up with a doomsday prophecy and it's really grim. Now, one third of the world will be plunged into recession and this economic apocalypse will be felt by everyone. Now, according to Kristalina, the IMF head, we expect one third of the world economy to be in recession. Even countries that are not in recession, it would feel like a recession for hundreds of millions of people. Now, this is a very ominous sign because the IMF is normally behind the curve, right? We know that. They are like the Federal Reserve. They couldn't predict the housing crash back in '08, and like Powell and Yellen, they couldn't see the inflation crisis building back in 2021. So when the IMF is telling us that a big crash is happening, they are putting their necks on the line because this is probably too obvious to ignore. Now, I'm definitely a skeptic when it comes to the IMF, but we have to pay attention to this. And why is this financial Armageddon happening? Because the three big economies, the US, the EU, and China, they are all slowing down together. We have talked about this ad nauseum that globalization has doomed the world economy. We are so interconnected that if the big economies collapse, the rest of the world will burn as well. But this time, it won't be a 2008 recession where inflation suddenly drops down because demand has been destroyed, right? Today's inflation is caused by supply side problems that go beyond just the Russia-Ukraine war. There have been decades of underinvestment into energy sector and the obsession with going green is coming back to bite us. Now, many people believe that Europe or China will be the ones to cause the global recession, but I personally don't think so. Now, just back in 2008, I believe the United States, and more specifically, the Federal Reserve, is going to cause the financial meltdown. And this all has to do with the Fed raising interest rates, right? To the point where the world just implodes. And this is what you call Triffin's dilemma. This is when the issuer of the world reserve currency, the dollar, decides to sacrifice the world to save their own economy. Now, what the US is doing right now is pulling money away from the world to fight their domestic inflation. And because of this, the world economy is on the brink of contracting, right? And firstly, let's understand what the Federal Reserve's mission really is. It is to ensure stable prices and maximum employment in the United States, not in Europe, not in Asia, but only in America. So whatever the Fed does is to save the American economy first. Whatever happens to the world is secondary. And the Federal Reserve, they are losing control of fighting inflation back home. Now, the Fed, they have been hiking rates from near 0 to 4.5%, but core inflation is still above 6.4%. The inflation battle isn't done yet. It won't be done anytime soon because the Fed, they are trying to solve a supply side problem with demand destruction. And when you can't increase the supply of energy, commodities, and food, your only option left is to crush demand and make people jobless, right? And that's why the Fed has been hiking and sucking liquidity away from the markets. They are deleveraging their balance sheet and selling away over $400 billion in bonds to pull cash away from the system. So to save their economy, the US is raising interest rates for the world. They are jacking up the cost of borrowing, not just in America, right, but in Europe, in Asia, in Singapore, in Australia. And this is what the IMF fears. All emerging economies will get hit the hardest because the Federal Reserve is reducing liquidity for the world. Now, this dollar shortage isn't over, and if the US enters a recession, they will buy less stuff globally and fewer dollars will flow to the rest of the world. And when you have to buy global commodities with dollars, that is a big problem. And this is why the IMF, they are calling the United States the most resilient and might even avoid a recession. But pay attention to the next sentence. If the labor market is very strong, the Fed may have to keep interest rates tighter for longer to bring inflation down. And we know the Fed wants unemployment to go up as a sign that they are winning the inflation fight. But the unemployment rate is still at all-time low. So the Fed will keep tightening and they will hold interest rates high. And this could cause the rest of the world to slip into a recession. But let's address China as well. The IMF has mentioned that for the first time in 40 years, China's annual growth is likely to be at or below global growth. And this alone could drag the world economy down. And the main driver for that will be an increase in infections once China ends the lockdowns. And according to Chinese media themselves, we can see infections are going to continue well into late January in the rural and smaller sized cities. Now that is a problem Because China is the world's factory. Remember when we said inflation is a supply side problem? It goes beyond just energy shocks from the Russia and Ukraine conflict, right? China is one of the top trading partners for many countries, including the United States, the Eurozone, and Japan. So we could be in for another global supply crunch. And I want to imagine what will happen if China's growth gets hammered. Now, the IMF is predicting tough times for China. They believe that for the next couple of months, it will be tough for China and the impact on Chinese growth would be negative. The impact on the region will be negative and the impact on global growth will be negative. Because if they're right, China's factory shut down, there's going to be a lot of inflation pain for the rest of the world. China's manufacturing PMI has declined again in December. And if this continues, we're going to see fewer Chinese goods going to the market. There's going to be another supply chain crunch and it's going to affect every country out there. The recession will get worse for the world if China craters. Because not only do you have fewer US dollars around thanks to the Federal Reserve hiking, the supply of Chinese goods will cause more supply side inflation if it shrinks. So this could very well become a double whammy for weaker emerging markets where they already have a currency crisis thanks to the dollar shortage and now they have to pay more to import Chinese goods that will be in shorter supply. And this is why the IMF, they're just so frightened, right? A Chinese economic crash is just adding fuel to the fire that the Federal Reserve has started with their rate hikes. But the worst hit is going to be Europe. Now guys, if there's going to be a biggest loser in 2023, it's going to be the Eurozone. Now the IMF openly admits that Europe is truly doomed. And according to the IMF, half of the European Union will be in recession. And it's easy to see which ones will be the most trouble, right? We just need to look at the countries most dependent on Russian energy for their manufacturing base. And we are of course talking about Germany. Now the Germans know that they are in trouble and that's why Olaf Scholz brought his team of business leaders to China. They need to access cheap Russian energy by partnering with Chinese industries to lower their manufacturing costs. They need the Chinese to keep buying their cars and machinery. China is Germany's biggest trading partner, surpassing even the United States. But here's the big problem, guys. If the IMF is right and China's reopening spirals out of control, then German revenues are gonna crash. We're gonna see a horrific crash in the German economy. Now, right now, it looks all fine and dandy with their unemployment somehow falling and the Eurozone set to hike interest rates to stop the wage price spiral, right? They want to prevent wages from rising out of control. But if China's economy starts to crack and they stop buying German products and stop shipping cheap stuff, the IMF's prophecy is going to come true. The Eurozone will crash into a deeper recession. We're going to see European industry gets hollowed out and move over to the survivors of this financial apocalypse. And it's likely going to be the United States and China. And the US, because they still have the reserve currency as a shield, they can print their way out of recession. While China has access to cheap Russian energy because Europe has isolated Putin with all their sanctions. So if you're European, you might want to brace for impact because the perfect storm might be around the corner. But let's talk about us, guys. Let's talk about us. What should we do if the IMF is right and a global recession is coming in 2023? Now, I think it's important to realize that this is likely going to be a stagflationary crash. This is very different. There are going to be three things that could define this recession. Now, firstly, inflation is still going to be elevated higher than 2% for sure. So prices are still going to rise because the supply side issue isn't resolved. The G7 price cap on Russian oil is going to lead us towards another energy squeeze. We have Russia on the brink of cutting output by 7%. And that's 700,000 barrels a day. And that's going to put upward pressure on oil prices. And the second part of this crash is that interest rates are still going to stay high. The Fed is projected to raise rates up to 5.1%. We have 100% of the market predicting the Fed to hike during their February meeting, so the pain isn't over yet. And I want us to be realistic here because once the Fed reaches their target rate, they are not going to reverse immediately. I believe there will be a pause down the road, but not a Fed pivot. Now, Powell is going to keep rates high for much longer than most people would expect. He said time and time again, guys, his goal is 2% inflation. He wants to see inflation crash down to that level before he steps off the gas pedal. So you got to ask yourself, are you ready for 6 to 18 months of rates at 5% or even higher? And finally, because interest rates are going to stay high, we're going to see the economy grind to a halt. Unemployment in the US is set to surpass 5.5% and could even reach 7%. And this is very bad news for the markets because once unemployment rises, the stock market is going to start pricing in poorer earnings, and we could see equity prices crash down to earth. And right now, the Shiller P ratio is still elevated at 28. Won't be surprising if it drops down to the mean of 17 as we start pricing in reality. And here's the situation. If a global recession hits, there's nowhere to hide and almost no asset left to go on the offense. I know this channel talks a lot about gold, but if the whole world is on fire, we could likely see a classic liquidation event of gold to save people from their margin calls in the stock market. And I'm not saying that it would crash by over 40% like back in the 1980s, but there could be some downsides if the world economy collapses. And the big irony is that cash is going to become much more valuable if a recession hits, even in today's inflation hell. And that's why I'm keeping some dry powder on the sides, right? It's sitting at a money market account, yielding around 4%. I see the additional 3% inflation hit as an option premium I have to pay to stay liquid, right? I will still have the cash to immediately deploy if the markets collapse around me. And when it comes to loans, you want to be really careful before you take out a mortgage today or borrow money to invest, right? Mortgage rates has easily doubled over the past 12 months and it's gonna stay high, guys. If a recession strikes, asset prices could collapse, but your repayments are guaranteed. And I think we must realize that interest rates are not going to suddenly drop down to 0%. Those days are gone, so you could be stuck with a hot potato. So if you have cash, it's time to pay upfront. If you need to borrow tons of money for something, you probably can't afford it. And here's the deal, guys. The IMF is most likely correct about this global recession, and it could be even worse than their prediction. The IMF believes that the United States will be insulated from the crash, but if the whole world collapses, no one will be able to escape the pain. But I want us to be prepared for this collapse because a lot of assets are going to be at fire sale prices when the recession hits. Money is being pulled out of the system and inflation is going to burn through people's savings. And if mass unemployment hits, it's game over. So if there's ever a time to hunker down and prepare for the worst, this is it. And whether you like the IMF or not, what they are saying has a lot of truth. And we gotta pay attention to this one. But let me know what you think. Is the big crash coming in 2023? Will the United States really escape a recession? And let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.